Welcome to the Explainer. At first glance, this really looked like a quiet, holiday-shortened week. But if you zoom out a bit, we literally just witnessed a massive, fundamental shift in global capital. Today, we're going to look at everything from macroeconomic data to constitutional law, and by the end of this, you're going to see exactly how all these seemingly random events are intimately connected. More importantly, we'll see exactly where the smart money is actually flowing right now.
So let's dive right in by asking the big question. Is this the week America blinked? Was this the week where everything from tech to the broader economy really started repricing risk and institutional stability? Because again, on the surface, things might have seemed calm, but under the hood, the most powerful economy on Earth just signaled some major structural shifts.
And we're starting off with a glaring paradox. It's the ultimate test of signal versus noise. On one hand, bad economic news actually triggered a stock rally. And on the other hand, near-record Bitcoin prices are somehow coexisting with extreme market fear. We are living in a world right now where bad news is treated as good news simply because it implies cheaper money later on. It's a total inversion of traditional market logic, right?
Here is our roadmap for today. 1. The macro paradox. 2. AI sovereignty wars. 3. Budgets and capital flight. 4. Redefining institutions. And finally, 5. Forecasting the next move.
Let's kick things off with Section 1, the macro paradox. The U.S. just added a mere 57,000 jobs instead of the expected 110,000. Now, normally, that spells absolute panic. But instead, the S&P 500 rallied, closing all the way up near 7483. But here's the thing. The real story is the quiet engine running behind all of this, the U.S. dollar. The DXY weakened to 100.9, and that pushed gold to a staggering 41.75. Gold isn't necessarily doing something magical here, it's simply acting as an honest mirror to a weakening dollar.
And then we have this number, 22. Despite Bitcoin sitting near a very healthy weekly high of $62,444, the Fear and Greed Index is sitting at a panic level 22. Listen, these two things just shouldn't logically coexist. Either smart money is quietly accumulating while retail panics, or the chart is flat out lying to us. It's a completely fascinating decoupling of price and sentiment.
Moving on to Section 2, AI sovereignty wars.
We're watching the rapid rise of what's being called intelligence sovereignty. AI is no longer being viewed as just another piece of SaaS software. It is highly protected national and corporate infrastructure. The old assumption was that everyone would just happily rent intelligence from a massive centralized cloud. But now, corporations and nations are waking up. They're realizing that if they share their proprietary data, they are essentially commoditizing their own unique edge.
This quote brilliantly captures the mindset of enterprise leaders right now, like Alex Karp at Palantir. He argues that outsourcing your data to external labs means giving away your company's future alpha. Think about it. If you hand over your data to a Frontier Labs magic box, they learn your business inside and out, and eventually, they might just decide to compete directly with you. You are, quite literally, yielding the means of production.
And this isn't just theory anymore, guys. We are seeing this new defense trade executed in real time. Look at the massive partnerships happening between Palantir and NVIDIA. They are building a sovereign AI operating system where the client actually owns the hardware, the data, and the model weights. On the global stage, Alibaba effectively restricted Anthropic just to protect its own digital borders. That's not just a corporate compliance checklist. That is a sovereignty signal. Organizations are actively running from cloud reliance back to on-premise compute to protect their crown jewels.
Which brings us to Section 3, Budgets and Capital Flight.
$1.4 trillion. That is California's total combined state and local public debt, and that's accompanied by up to $1.5 trillion in unfunded pension liabilities. Now, while the state recently announced a balanced budget on paper, the underlying mathematics show a massive, looming cliff of debt that sits senior to state bonds.
When you really dig into the mechanics of their budget, it reveals some incredible fragility. Personal income tax makes up about $142 billion of their revenue. But half of that, around $70 billion, is shouldered by just 150,000 people. That's the top 1% of earners. This creates a highly fragile revenue dependency, where the entire state's fiscal health relies on a tiny fraction of its population.
The absolutely crucial takeaway for investors here is that capital is highly mobile. When taxation rises, the data shows a measurable, steady exodus of both corporations and personal wealth. Since 2019, 15 Fortune 500 companies and over 2,100 mid to large-sized companies have packed up and left. Even more critical, 1% to 1.5% of the state's total adjusted gross income is walking out the door every single year. Make no mistake, capital always flows to where it feels best treated.
Let's shift gears to Section 4, Redefining Institutions.
Okay, so capital flight is one thing, but how a nation defines its own membership is an entirely different scale of institutional repricing. The Supreme Court recently struck down an executive order ending automatic citizenship by grappling with two very distinct legal philosophies. You have the literal text of the 14th Amendment versus the original intent of its framers in 1868. The textual argument says the words clearly apply to anyone born within U.S. limits, period. The intentional argument, however, suggests that in a post-1857 Dred Scott world, the 1868 amendment was specifically engineered to ensure citizenship for newly freed slaves, not to address modern global migration. It's a profound, complex debate about how a 150-year-old piece of paper operates today. To put the sheer scale of this ruling into perspective, 255,000 children are born in the United States every single year to non-citizen parents or those on temporary visas. That is a massive demographic reality intersecting with an incredibly intense constitutional debate.
Stripping away all the partisan politics for a second, the key takeaway here is that as legacy institutions are tested, whether we're talking about state budgets heavily reliant on a few individuals or constitutional definitions facing modern realities, human and financial capital will rapidly reallocate. It is all part of the exact same great repricing.
And that brings us to our final chapter, Section 5, Forecasting the Next Move. Investors are officially turning their backs on legacy forecasting models. Instead, they're looking at prediction markets like Polymarket, which are overwhelmingly pricing in a 90% chance that the Fed does absolutely nothing in July. Capital is finding truth through decentralized real-time betting mechanisms, where people actually have real skin in the game.
In fact, this sleeper story that nobody is talking about right now is that betting markets like Kalshi are actually pricing in a negative inflation print for July. If that hits, it could entirely flip the economic narrative for the second half of the year, and it would give the Fed the exact cover they need for a September rate cut. This is sentiment shifting miles ahead of the traditional news cycle.
What you really need to take away from this is that as confidence in traditional data completely erodes, capital is flowing into hyper-efficient execution platforms. Humans aren't necessarily bad at investing. We are just really bad at managing our own panic. Emotions override plans. And that is exactly why systems that translate human intent directly into flawless financial execution are rapidly replacing the old ways of doing things.
So I want to leave you with this final thought to ponder. As the old rules of economics, technology, and society are completely repriced, from AI sovereignty to state budgets to constitutional law, who exactly is building what comes next? Thank you so much for joining this explainer. Keep questioning the consensus, keep watching where the capital actually moves, and we will see you in the next one.